Good morning, and thanks for listening to our brief market update. Today is Thursday, September 3rd, and I'm sitting here today with Steve Gibson, our Chief Investment Officer.
Good morning.
Steve, the U.S. stock market has just been doing so well. We've had such a great rebound, and we're setting new records every day. But with COVID affecting so many businesses, with the unemployment rate being so high, why is the stock market doing so well?
Well, Pete, that's right. The S&P is up about 10% year to date, but we really have two markets. So technology stocks that are certainly booming are driving the market, and they're up 30 or 40%. But the rest of the market, 95% of the other stocks combined, are actually still down about 5% year to date. Now, it actually makes sense that these technology juggernauts are leading the market because, for example, just home shopping is up 100%. So they doubled their revenue, and that's true of Netflix and all the other large, big technology companies. So that part of the market makes sense. It's driving overall returns. But the market is telling you, in the rest of the market, the value part of the market, they're not convinced that airlines and cruise ships and banks and all the rest will be okay until we get a vaccine or we get past this virus.
So Steve, you mentioned that there's two different segments of the markets going on. What changes are you making today with our client portfolios to react to these two different segments of the market?
Yeah, Pete, just like we have a two-pronged market, we have a two-pronged strategy with portfolios. As we communicated earlier, we added earlier this year the triple Qs. That's the Invesco, NASDAQ 100, the top 100 stocks, and those are about half technology. So we're going to continue to keep up if technology keeps driving the way it's going. However, we have also added the JP Morgan Hedged Equity Fund. And that fund pretty much will participate in maybe a 5% appreciation, but importantly, it's meant to protect against a correction, so it will only be down about 5%. Beyond that, it actually hedges out the downside. And so we're both protected with part of the portfolio in case the value part of the market doesn't get a vaccine or get a recovery, but we're going to keep up with the triple Qs.
And what I found when I've been looking at client portfolios is now our stock to bond ratios are not in line with their risk tolerance levels because of this great increase in the stock market. Are you rebalancing today our client portfolios?
Yeah, that's really what we're doing here in September is we're really rechecking each client's balance between stocks and bonds. Because it's very easy to sort of lose your perspective on that because stocks have moved up so much that many clients have more stocks than their financial plan calls for. And we have a good tradition at Hoover of staying disciplined with that, sticking to the plan. So we're readjusting the stock bond mix right now to make sure that if we get an unexpected decline in stocks, that the bonds are there to do their job to protect the overall value.
So Steve, the U.S. markets right now are doing really well, but the international markets are still struggling. What steps are we taking within our international investments?
Well, recently, because of the coronavirus problem in the U.S., we are seeing a little bit of softness in the dollar, and that's what we look for before we get real interested in international. Now, earlier in the year, we trimmed back some of the value holdings in international and overall international just a bit, but that's because those type of funds hold banks and other things that we think could struggle. Right now, though, there's some very interesting opportunities in international in North Asia. China consumers are up 47%. I mean, there's some real growth there that we do take advantage of with our Hancock International Growth Fund, for example. But we don't want to be in Russia and Argentina and Brazil and India, places that are really going to struggle with this virus. But international is a logical diversifier outside of the U.S. markets.
Thanks, Steve, for your advice. As always, please contact your financial advisor or financial planner if you have any questions or concerns. I'm Pete Hoover. Thanks for listening.